Alright guys, I'm back with another video. Now this one is going to be a quick one, I hope. And this video I'm going to link an entire video so I don't take anything out of context. And then also Miran's Rant did an amazing reaction video to this particular video. I would love everybody to see it, just in case you haven't seen it already. But anyway, in this particular segment though of the interview, this guy, Michael Packer, I might butcher his name, but he is the Wedbush analyst who is responsible for giving GameStop this price target right here, $6, okay? And that's the only analyst out there that's willing to give GameStop a price target. No other one. So this is the face of the guy. And sorry. So he mentioned something here that has kind of raised a red flag to me on another stock, not on GameStop, but on another stock that's always like comes synonymous, with GameStop. So let's listen in and I'll come back and explain later.
Format. So GameStop can survive, but not in its current form. It's got to be much smaller than it is now. And so think about movie theaters. They can survive too if we trim out the unproductive ones. And that's really what GameStop should be doing. So get somebody like, I hate to say it, Adam Aron to run GameStop. He would figure it out. He would actually do the right thing and trim the store count. We don't have that guy. So I don't think it's going to happen.
That is crazy to me that he said that, because GameStop has been trimming, has been cutting down store and make bank, not bank, but I mean, make more money per store. We already know that as a GameStop investor, I hope. But if you haven't looked into GameStop already and you've been kind of sucker into thinking that AMC is the same as GME, it's not. Please do not compare the two. I did many videos that kind of tell you that already, but this should be a nail in the coffin for people who still believe that. I know, I'm not saying to buy whole or sell whatever, but just know that this guy is a known, I couldn't say that. I don't know if he's a short seller himself or he's working for somebody who's short GameStop, but to hear him mention the guy by name and to hear him saying that Adam Aron is better than Brian Cohen, and knowing all the facts myself as a AMC shareholder before, I sold out when Ape was introduced because I view it as dilution after dilution after dilution. And every single step of the way that Adam Aron has done, never mind what he said on Twitter. I don't care what you say. I don't care what you say to people saying that you are ride or die or whatever. I'm interested in your action. Okay? So based on Adam Aron action, dilution after dilution, excuses after excuses, he never delivered for retail investor. Up until this point, the share price right now, if there's no reverse split, is at 60 cents. Okay? 60 cents. So for people who have not followed, let me lay out something about AMC that happened ever since I follow it, right? Now, when I first bought in, it was before the run, before the 72. I held up to 72. I sold at 55, but I jumped back in at 30, okay? Believing in the narrative. The reason why I invested in AMC in the first place, it was because of the recovering play. I did not expect the short squeeze at all. My goal was to hold it up to, $15 price point, but by the time I got in, it was at $14 already, and then that was the run up right there. And so I got to ride it up and then sold at 50, around 40. I sold little by little, but then I jumped back in at around $30. And this is where I told my friends, hey, it could run again, right? Because I believe in the narrative when it jump back in the second time. But then when I look at what Adam Aron is doing for the company, he was starting to introduce Ape. And I was like, that is terrible. Like for any, person uh, to 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 keep holding to the company, because my view was the dilution. It's a way for him to dilute more and more and more. And thank goodness at that time I found Moran's channel, and then boom, boom, boom. But anyway, so I explained that before. And then what happened after Abe's? What did he do? He wants to introduce Abe. He waited until Abe was like 60 cents. So Abe came from $12 down to 60 cents, and he announced that he was selling it to Antara Capital for even lower than 60 cents. So even below the market value. So Antara, if you look at the filing, has been selling on and off with profit. Abe. Meantime, people buying Abe, holding Abe, losing money, right? For retail investor out there. And so what happened? Oh, that didn't work. Let's see. People tell you, oh, he didn't know that it was going to be that low. It's like, to me, that was BS, right? So what did he do? He wanted to convert Abe back into AMC 1-to-1. So that's another even more dilution. And then what happened? He wants to do reverse stock split. So every single action that Adam Aron did was wrong for a retail investor. There's no question about it. Now, whether his motive is to help his company or bankrupt the company is remain to be seen. I know what my point of view is, but for you, viewer out there, you have your own opinion. I'm not gonna, tell you what you should think about that. But to me, that is a nail on the coffin right there. And the fact that this guy is praising Adam Aron instead of, looking at his action, whether it's beneficial for who in particular. Yes, if you are a short seller, Adam Aarons is your man. Okay, that's just my point of view. But if you said that Ryan Cohen has not done what you are telling the audience right now that he has already done, because GameStop has been doing that. GameStop has been cutting store number and increase in sale in order to have one store makes more money than the previous year. Okay, I hope that makes sense. It means that, per store, GameStop makes more money per store than the previous year. Okay, and again, this is just a misleading segment into telling you that GameStop is somehow worse than AMC. It's not true. It's not true. GameStop has not been diluted, the shareholder, even once. Even more enticing for you is that right here. Let me go back to here. See this? This number increased by day, by month, whatever. Just a couple months ago. Hold on. Let me show you that. It's like, goodness, this video is getting too long, but I wanted people to know the truth, man. Okay, you see this? Current report, that's GameStop. Hold on, let me move this over here so I could see the insider activity. Right here. Do you see these two? Alan Adel, Larry Chang, right, has been buying this company like crazy. And these people are board of director, okay? They sit on the board. There we go. And what did they buy? 15,000 shares. At what price? You see this? $17, okay? So that's the good sign that they are actually believing that GameStop is undervalued, okay? Look at this. Close to 5,000 shares, 6,000 shares right there. And so, this is going to keep on happening because um, they know that this is undervalued, this is undervalued, this is indicative of undervalue, okay? They need to fix this, but it's going to come out after the, net positive, right? Earning, hopefully, right? That's what we're hoping. I'm not hoping for a miracle here. Just natural progression of a good leadership looks like. So this is a number of short interest, 20%. That's high. What else? All of this is going to be fixed soon, right? Remember, fourth quarter is the best quarter for GameStop. Okay, look at the net cash. If GameStop were to liquidate everything, asset versus liability, they will still have close to $500 million left to do whatever they want. Okay, so man, I mean, look at the working capital. They have that close to $1 billion to work with. What does it mean? Look at the working capital. What is the definition? Working capital is the amount of money available to a business to conduct its day-to-day operation. It is calculated by subtracting total current liability from total current asset. So what does it mean? It means that they have more asset than its liability by $1 billion. That's huge. Look at any other company out there. I dare you to, please. If you look at Apple, okay, I always look at Apple for some reason. Now, Apple is not the worst company to invest, but every single metric out there, overvalue. Okay, we've learned about this one just now. Anything between 1 to 3 is good. Under 1 is better. Look at what Apple is. 6%. 6 times. Okay. This one, as I pointed out before, GameStop beats Apple. But let's look at the working capital. Look at this. Working capital for Apple, the biggest company in the world, is minus versus what is working capital for GameStop? We saw it. Close to $1 billion in the plus side. So you're telling me that GameStop is a terrible company to own? Come on. But anyway, I digress. But how about look at AMC? Let's look at AMC since we're at it right now. Okay? So price to sell, okay, that's pretty good. But again, they have debt. So this is just accounting for capitalization versus revenue. That's it. Okay, that's all what it account for. It doesn't account for debt or anything like that. But if you look at the enterprise, let's look at the enterprise. See, okay, let me go back. All right. Sorry about that. My dog was going crazy. So as I was saying, enterprise value to sell for AMC is not too bad because it's under 3, but it's taken account company's debt, right? But if you look at this particular one, look at this. This number should be below 10. If you look at the Google here, anything below 10 are seen as healthy for the company, right? But look at it's cringe that this guy is telling you that Adam Aaron is better run for GameStop. It's ludicrous to say the least, and it's misleading, right? Now, what is he trying to tell you is that he wants to mislead people into going into AMC, thinking that AMC is better than GME. And it's always been a narrative here, because whether, AMC is cheaper up in price per share, right? And not accounting the fact that, look at this, debt to equity ratio is way low. Anything below 1 is terrible, right? Because again, they don't have enough cash to cover the current liability. Look at the debt level. I don't know, like it's not showing here, but they have a lot of debt. Look at this debt to earnings before tax, I think, right? If you look into it, but it's massively over. And look at this, they don't even have enough money to pay its interest based on the earnings that they got. Okay, so this is what it means. Anything plus 3 is good because that means they have enough money to cover its interest. Okay, GameStop is 5 plus 5. And there you go. You know, every single metric out there tells you that AMC is terrible and Adam Aaron is the CEO of this company. And to hear this guy elevating Adam Aaron over, Ryan Cohen, it just go to show you why he's terrible at giving this price target, $6 price target to GameStop. Would you believe it? I mean, like, man, it just got to show you, to me, he's getting GameStop wrong at the very least. All right, guys, that's all I have. Sorry, this video is longer than I intended to be, but it needs to be said though. All right, bye.